Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Silicon Valley Bank breaks. Well, if you haven't been paying attention to the news over the past week, we just had the second largest bank failure in U.S. history with the insolvency of Silicon Valley Bank. And that was followed by a similar situation with the also not insignificant Signature Bank of New York, which also has substantial Silicon Valley exposure. Now, what occurred was a perfect storm of weakening technology business trends, especially among startup venture capital firms, rising interest rates due to Fed tightening of monetary policy, and just plain old bad management of the bank's matching of the duration of its assets and liabilities, which was laid bare when depositors began pulling out their funds, sparking a little bit of a panic run on the bank. Now, while it's likely this episode will have further repercussions across markets in the coming weeks, let me be clear. This is not likely to lead to massive bank failures across the rest of the financial sector. Silicon Valley Bank and Signature were both unique situations that had very narrow exposure to startup technology firms and cryptocurrencies. The majority of the banking industry is very well capitalized and diversified. Also, the government has since stepped in and guaranteed not only the deposits of Silicon Valley and Signature banks, but of all U.S. banking institutions. Not even sure they had the legal authority to do that, but it should certainly ensure we avoid any more bank runs anytime soon. For this week's featured insight, the biggest risk may be avoiding it. Now, it's important to learn, both in investing and in life, that risk cannot be entirely avoided. Every time you leave your house, you take some kind of risk. But staying in has plenty of risks too. Everyone needs fresh air and sunlight after all, right? Now, it works much the same way in the financial markets. Most people assume that sitting in cash means taking no risk. But we've all recently learned how sitting in cash can erode your purchasing power by inflation. This is especially true over long periods of time. So every investment choice has some type of risk associated with it, including making no choice at all. The key is to design a portfolio such that your investments offset each other's unique risks in order to produce a desired result over time. Looking ahead, yet another Fed meeting. Well, if you're a regular viewer of the Investor's Edge, you know that I often talk about the Fed, what they did, and what they're likely going to do. Now, the reason for that is that, for better or worse, they've become a key driver of financial markets. Before the Silicon Valley Bank debacle, there was about a 70% chance the Fed was going to hike rates by half of 1 percentage point at their upcoming meeting next week, with just a 30% chance of a quarter point hike. Well, as of now, the markets are pricing in a 70% chance of a quarter point hike with a 30% chance of no hike at all. Now, the markets would likely cheer the Fed leaving rates alone, at least in the short run, but the fear may then turn into whether or not our inflation problem has truly been brought to heel. In all likelihood, we'll get another quarter point rate increase, along with some probably softer language regarding the potential for future increases. Stocks could ultimately rally if the Fed can successfully thread this needle. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.